All right, so it's 1 o'clock. We'll wait a couple of more minutes to make sure everyone has enough time to dial in. All right, welcome everyone, and thanks so much for joining today's FinLink live webinar. Happy to have you join us as we dive into the exciting advancements and updates across our platform, partnerships, and everything else that's happening at FinLink, and what this all means for financial professionals, including current and prospective members on the platform. And you may have noticed, FinLink has had several announcements recently, including the hiring of Zander Heinen as president of the firm, who's on the call with us today, and our newly forged partnership with Republic Capital Group, who's a preeminent and extremely reputable M&A and advisory firm in the industry, known for their integrity and passion for helping advisors navigate a number of facets within their business. Our commitment to reshaping the financial services space, empowering advisors, driving growth through technology, partnerships, and M&A solutions has never been stronger. FinLink is the next evolution of SuccessionLink, offering a more dynamic platform, cutting-edge tools for financial professionals to connect, grow, and succeed, and transition their businesses seamlessly. Today, we'll talk through a number of these features and discuss how FinLink is setting a new standard in the industry and how financial advisors can accomplish these goals. So we're excited to be joined today by our new president, as I'd mentioned, Zander Heinen, and Michael Reed, who's a partner, managing director at Republic Capital Group. Both will be providing insights into how FinLink is building the largest networking and growth platform for financial advisors, and how our partnership with Republic Capital Group will bring a breadth of knowledge and solutions to our members. Before we get into the discussion, though, I'd like to show you a number of the updates on the platform and dive into a product demo. If you have any questions while we're going through the demo, feel free to ask the questions within the chat feature, and we will answer these questions as we go through this presentation. Can you guys see my screen? All right, great. So as you know, as everyone knows on the call, we've rebranded from SuccessionLink to FinLink to better capture what we're trying to do from a strategic vision. It's not so much just about succession planning anymore on the platform, although succession planning will and always has been one of the most important areas that we focus on the platform. But as we expand this ecosystem into growth, networking, engagement across mergers and acquisitions, recruiting, jobs, right? So we have a jobs marketplace now, which will bring in the availability of human capital at your fingertips, and then also finding and promoting office space within the platform. One thing that you'll notice is the redesigned dashboard. So for those of you that haven't had a chance to log in and see the new dashboard, it's a much more intuitive and user-friendly dashboard. We have the opportunities feed, which again has always been a part of the platform. It's now redesigned, and your new opportunities will flow through this feed here. One of the most important things that you can do in your dashboard is update your saved searches. The saved searches is what will prompt new opportunities to be emailed to you, but also flow through that activity feed. And so you can create new searches amongst M&A, recruiting, jobs, and office space by simply clicking on create a new search, selecting the category that you're interested in. So if you're looking to find succession, acquire a business, you would select the M&A category and create search. And you can further drill down on the type of opportunities that you're looking for by minimum, maximum AUM, revenue size, custodian, broker dealer, and so on. The messaging feature is something that is actually being worked on today. This is going to be redeveloped, which will be a part of our uh, the social networking feed. So you're going to have a newly redesigned messaging feed or messaging feature, which will be a part of the social feed. Now, the social networking feed, which was recently launched about a week and a half ago, this allows our users to really jump into these communities that are really focused on certain aspects of growing your firm, succeeding your firm, finding human capital, finding products and services that can help you grow and scale your firm. And this is going to be a pivotal part of our platform going forward, where you can come in here, say hello, introduce yourself, ask questions, connect with other users, and really build your network within the financial services community. Our valuation tool, which has been recently revamped, and we're proud to say is now powered by Republic Capital Group, is in itself an incredible tool. We have harvested data over the past 3 years to provide this market-based valuation. And it takes you a couple of minutes to complete the valuation tool by filling out information on your business, income, assets, liabilities. And we provide you with a market-based valuation, discounted cash flow, and we additionally offer you comparables, which will allow you to look at comparables of recently sold businesses that look much like your business, so you can get a really good idea of what your practice should be selling for. Back to your dashboard. And where you manage your listings here, this is also important. So if and when you do have a listing going forward on the platform, we will be requiring any users to update their listings at least once a year. Further to that point, we're really focusing on the engagement on the platform going forward. And so we're creating a number of different features using technology, which will prompt and require users to respond to a certain number of messages. Any users on the platform that aren't responsive or aren't engaging on the platform, their listings will be removed. So it's extremely important that your listing information is updated on the platform. The last thing I'm going to show you before I hand it back over to Zander and Mike, the opportunities tab. Now, this is really where you can dive into and search for opportunities across the 4 different marketplaces. So again, M&A, recruiting, jobs, and office space. And one of the things that you'll notice here is you can customize your search with advanced filters. So for instance, if you're a financial advisor looking at users that or other members that are looking to sell their business in or around San Diego, you can, again, specify a range for assets under management, a certain custodian, broker, dealer, and you can add any of these searches to your save searches and click yes here. And it'll go back into your save searches on your dashboard. Now, why is that important? It'll allow us to send you opportunities of interest right into your email inbox. And it'll also, when you're logged back into the platform, curate these opportunities into your opportunity feed. And again, that's the power behind this platform. We have 76,000 registered users. We expect this platform to have over 100,000 registered users in the very near future. It's important that you let us know what opportunities that you're looking for. Make sure your listing information is up to date, and make sure that you're responsive within this ecosystem. Otherwise, your account will make it flagged for not having enough engagement. Now that you've seen the power of the platform, I'd like to bring in Zander and Michael back into the conversation, and we'll explore the M&A marketplace, what's happening inside of the space and how our partnership with Republic Capital Group is really going to bring a very, very different and dynamic solution to all of the users on our platform. Zander?
Yeah, thanks, Nick. Thanks everyone for joining today. I'm honored to be here as the new president of FinLink. Um, I'm extremely excited to have this call today with Michael Reed. He's really a guru in the M&A space, very well respected. I think, Mike, we should kick off with just a brief overview of what's going on in the M&A markets, and then we can get into some back and forth with our partnership going forward.
Sure, sounds great, Zander. And thank you and Nick for inviting me to be here today. And we are so excited about this partnership and being able to work with you guys and help advisors. And that really was the spirit of how all this came together, right? You guys recognize that we run a firm that started 10 years ago and has become recognized as very boutique, white glove. We're not transactional at all. We're very focused on making sure that our clients are getting the help and support that they need, that we're being resourceful and we're being creative as it relates to ultimately what they want to achieve. And in some cases, it's not necessarily a transaction. Sometimes it's internal transition. They just didn't know how to achieve that goal. So we're really excited about this opportunity and looking forward to 2025 and onward. So yes, the market space is very busy right now, as you've seen. The 2024, we hit record high of transactions. Previously, that record was held in 2021, where we saw approximately 264 deals. In 2024, we saw 272 and a very active fourth quarter. And that has continued into 2025. And why are we seeing that? Well, we're seeing a better economic environment. The rates have gone down, so cost of capital is more reasonable than what it was post-COVID. And we're also seeing a marketplace that is full of advisors and firms that don't have succession plans. They don't have a strategy for succession, and they're getting very concerned about what that next step may be. And many of them see executing a transaction, a merger, or bolting into a larger firm as a good solution. So I think that's why we're seeing all the activity that we're seeing. We're also seeing increased deal size. So the average AUM per transaction in the first 11 months of 2024 was approximately $3.2 billion. So that's a 163% increase over the prior year. That's a big difference. And we're also seeing a very active marketplace as it relates to those firms, the larger firms that have done a lot of acquisitions. So the serial acquirers really represent about 69% of the transactions that occurred in 2024. So a lot of things happening. It's very active. Why? What are the key drivers? As I said, the macroeconomic conditions are better. Advisors are aging and looking for a succession solution. We're also seeing clients demanding more services. And so many of these firms feel that by being part of a large organization with more arrows in the quiver, that they'll be helping their clients. And we're seeing the valuations higher than they've ever been in the space. And private equity has played a big role, seeing a lot of private equity activity in the wealth and asset management space as it relates to M&A. Let's see, what else can I tell you? And I think the last thing is we're seeing a more discriminating marketplace. We're seeing buyers that are really looking closely at these acquisitions as it relates to their offerings, their organic growth. They want to see that that's a very positive thing for those firms as opposed to those firms that may be struggling. They're looking for next generation leadership and talent, and in some cases they're looking at geography, looking to expand their footprint. So those are the things that are driving a lot of the activity that we're seeing.
Excellent. And can you touch upon interest rates? Obviously, over the past couple of years, there's been a lot of interest in how that's affecting valuations and multiples in the market. Could you just shed some light possibly on your thoughts on interest rates?
Sure. So, historically, firms, when they make an acquisition, of course, they have a couple of options. Um, they can use whatever cash they have on the balance sheet. They can use their equity as currency or take on more debt. Well, on the debt side, the cost of that capital became pretty expensive relative to what it was pre-COVID. And so that was really influencing the amount of activity that we were seeing post-COVID. Those rates came down, especially at the end of 2024. So we saw three reductions in the Federal Reserve rate and a total of 100 bips from September to December. And that just made the cost of capital more attractive, and that has stimulated more activity. Um, and that's where I think we've been very helpful for a lot of our firms because oftentimes they really don't know how that might translate to impact on cash flow. And our analysts can run those numbers and you can really see a huge difference. I mean, a 1% adjustment in the interest rate can make a huge difference with respect to cash flow and what that looks like over a 10-year period and put a firm in a better position to do an acquisition without using equity. So really been a big factor in the activity that we're seeing.
And one thing that you mentioned that Republic Capital Group offers is, the succession, getting in order a succession plan. I think there's one fascinating statistic we have on our site. We have 13,000 of our people registered with us that do not have a succession plan. So can you kind of walk us through what that might look like to get a succession plan, which is different than a continuity plan, right? So what that would look like from your end of things.
Yeah, Zander, it's a very different process. And what we have heard in the marketplace, the clients that we've been working with, and also a number of the transactions that we've seen, many of these firms, as you referenced, don't have a succession plan, and they don't know how to put that together. Uh, it was such a concern among our base of clients and in the surveys that we did of the marketplace that we've actually hired a succession and exit specialist, someone who, prior to joining us, was working in a company with 50,000 employees, and her job was solely to work on succession for those leaders. So, what does this process look like? Many people think it's just simply identifying whether it's internal or external, how that transaction might take place. Sometimes firms will pre-negotiate a, uh, a deal with a certain multiple. That way, they have something in place in case something happens. It's much more comprehensive than that. What we like to do is we like to sit down with the firms that we're working with and discuss what does their exit look like? What does that look like if it's constructed in a way that uh, involves a voluntary exit, or what does it look like in case something, tragic happens, a death or disability? Those are two different things, but you need to have something in place. The other thing that we like to spend time on is really exploring whether that principal wants to see their firm sold to another company as part of their succession and exit strategy, or whether they'd like to preserve the legacy of their firm and see it internally transacted. Many of them have never even thought that was possible. Many still think it's really difficult because of the expense. We have great relationships with lenders. We can get long-term facilities in place and really help G2 leadership internally acquire the equity without necessarily having to sell the firm. So we try to be very, very resourceful and holistic and work with the principals and their G2 leadership team to do it in a way that that fits their goals and fits their desires with respect to long-term success. Once we have that identified, then we can either go out and get some capital, raise some capital, and put that in place for the G2 leadership, or we can start looking for a possible successor firm, and we can actually even negotiate a transaction prior to the succession so that at least we have something in place, God forbid something happens. So, and then we even go deeper. We'll even look at the leadership team, and really explore whether or not the G2 leadership is equipped from a capability standpoint to take over that leadership. Sometimes you may think they are, and they're not, and they need some skills to really take over the leadership of a firm. And that's where Amy Cunningham, who we brought in, is really an expert in helping align those leadership capabilities.
Yeah, Amy's great.
We have
Go
a,
ahead.
sorry to cut in here. We have a couple of questions, one that will end up circling back to Michael, but I wanted to get these questions answered to build more of a dialogue and maybe prompt some additional questions from our audience. So the first two are related to testimonials on the platform or shared experiences. Could we connect with advisors that have completed an M&A deal with FinLink through chat feature or any other platform feature? I'm assuming that's the messaging feature. So Succession Link, which was the previous name of the company, has been around since 2012. We rebranded in 2000, well, call it 3 or 4 months ago. On our old YouTube page, we have about 40 or 50 testimonials, video interviews with buyers and sellers on the platform. We have about 320 known transactions that have taken place on the website, and we will continue to build and create video testimonials of our audience, especially as we evolve this into more of a social networking platform where we allow the ability for our users to really participate and provide feedback on the platform. Another quick question, are you in Canada? Yes, we have several hundred Canadian advisors that are registered in the platform. Platforms like this are typically saturated with buyers, recruiters, and employers. What are your plans to attract more sellers? So currently we have 419 active sellers on the platform. We have about 1,200 sellers that are on the platform, just not with a listing just yet. The 13,000 users on our platform that don't have a succession plan, I would think that that's the more glaring number. And that's part of the reason why we're really creating what we're creating. How do we build and bridge the gap between advisors that don't have the resources, don't have the knowledge or the know-how to go out there and find a suitable successor, but also connect with those resources that can make it happen, like a Republic Capital Group? And so as you see, we evolve this platform from what it used to be, a bilateral or a two-sided marketplace. It's turning into so much more than that. It is going to be the go-to platform for connecting with your peers, but also connecting with resources that can help you get deals done. And then the last question that we have so far, Michael, how do you feel about a majority of independents that don't want to sign anything or just want to work until they're dead? There feels to be more of them than someone who actually wants something. So we get that question all the time. We get that sentiment from a lot of our users as well. They're going to work until the end of time. So Michael, what are your thoughts on that? What are your thoughts on that?
I love that. I mean, it's interesting. Republic Capital Group, most, if not all, of the managing directors and partners have in their early careers built, owned, and sold, transacted their firms. We've all had opportunities to be on the sell side. We've been on the buy side. So we've been in your shoes. We've been there. I've sold a company in 2011, and it was a very difficult experience. And that makes us different, right? So that's one thing. So with respect to staying independent and just riding it out all the way, I think it's great. We can help through our advisory services vertical. So we have a vertical that we launched a year ago outside of our M&A transaction expertise. We're now offering consulting services, we call it advisory services, to help firms with many details, corporate structure, leadership development, cultural alignment, revenue enhancement, all these things. So this is like one of those things that we would help a firm do is really how do you position yourself so that you can enjoy independence and autonomy as long as possible, but having something in place just in case something tragic happens or when you're ready to retire. And I think that's great. I think it's great to stay as independent as possible, but also have a uh, a risk mitigating plan in place for your clients and your staff and your team.
Another question related to that. What are you seeing in terms of the sell and stay deals where senior leaders remain at the firm? So I interpret that as somebody sells their firm and the owner or owners decide to stick around. Are you seeing any of that play out that way? Or is it where you see that, sell and stay? Are they getting a salary? Are they still participating in the upsides or profitability of the firm?
This is a great question. We could actually have a podcast just on this one topic. We do these kinds of deals all the time. We see sell and stay all the time. And there are some nuances to it. So when you do a sell and stay, obviously you're monetizing your asset. There is the question around, do you monetize part of it as equity? So you're getting rollover equity. You have ownership in the combined firm. That's important. What is your role on a going forward basis? What does your salary look like? And quite honestly, as a buyer, you're looking to normalize all of the officers' compensation and owners' compensation. So that's the expectation, is that your compensation will be normalized, but you're still obviously monetizing your asset. But we see sell and stay a lot. We're doing a deal now, $1.5 billion firm that's transacting. There's five people on the leadership team. All of them are staying. And so it involved negotiation around their salaries, compensation, bonus, earnouts, their equity position in the new entity or the emerging entity. All these things are really important, but it does happen quite a bit. And those details are important to negotiate.
We
Michael,
have,
go ahead, Brent.
sorry, Zander, go ahead.
Michael, I just had a quick question. I guess as a whole, what is the percentage of deals being financed with private equity, all cash, outside financing? What's that looking like? What's that landscape look like currently?
So the private equity has been much more involved in these transactions over the past 2 years than we've ever seen. So, for example, private equity was involved in approximately 70% of the deals that we saw in 2024 through November. That's a big number, right? Um, so they're a big player. And the perception of private equity that I often have to deal with in discussing it with um, buyers and sellers and how they navigate the world of private equity, things have changed dramatically. Uh, they are staying in much longer. They're very happy to take a passive position or an active position, depending on the needs of the firm and the skill set of the management team. So that's something, and that's a big source of capital. We're seeing firms readily use their own equity to do these deals because it aligns the interest, especially in a sell and stay opportunity, as opposed to a sell and leave. Sell and leave, we're not seeing any rollover equity, right? You don't want to have equity in the emerging firm, but sell and stay, it's very, very common. And we're seeing a lot of transactions that involve that. And then leveraging cash on the balance sheet or taking on some debt, as long as the cash flow looks healthy. We can help predict that even before we go out to the lenders and they do their debt ratio analysis. We already know we're strong going in. So just to answer your question, Zander, a lot of activity, private equity, a lot of movement around conferring equity to transact on these deals, and certainly opportunities to take on debt at a reasonable rate.
Great, thank you.
Michael, another question from one of the members on today. What about the little guys, small RIAs with 30 to 50 million in assets under management? What is the demand for these businesses?
Okay, so good question. What's the demand for the smaller RIAs? It's very strong. There are big opportunities out there. There are many firms around the $500 million to $750 million range that would love to do some of these smaller acquisitions. I say smaller, but they're no less important, and they can be somewhat complicated depending on how they're structured. A lot of these smaller firms, well, some of them involve people who are retiring. Those are a little bit easier to do, but those that involve a sell and stay situation, a little bit more complex. I always encourage the seller to take some equity in the combined firms. And there's a huge appetite out there. There's a lot of interest in doing some of these smaller acquisitions.
Yeah. Yeah, just to kind of piggyback on that, I would say that historically the sweet spot of our website has been sellers between anywhere between 10 million in assets under management and maybe 250 million. Now we're seeing that expand, especially as we create additional features and additional ways for financial advisors to network on our platform, and not only use it for a communication catalyst for finding succession opportunities, but also through growing and recruiting junior advisors to help scale the firm. You can't grow without scaling, right? So that's part of the reason why we launched the jobs marketplace, which we're really going to put our best foot forward to grow that in the coming months. We have dozens and dozens of candidates that have signed up on the platform. So you'll really start to see the whole FinLink platform evolve into a pretty incredible platform over the next couple of months.
That's great. It's exciting. And I have to tell you, the smaller transactions or the smaller firms are really struggling to keep up with the technological changes. And it's also pretty powerful to put your business card down and say that your firm has $1 billion under management versus 50 million under management. No disrespect, but there's a lot of power there. So there are firms that are very eager to have an opportunity to bring in these smaller firms. And they're really interested in their geographical footprint, new talent, young talent. All those things make a big difference, and so there's a very strong marketplace for the smaller firms.
We have another question. Can you provide some background on the founding and development of both Republic Capital Group and FinLink and its current partnership? So I'll jump into, so again, the FinLink was Succession Link prior to 3 or 4 months ago when we completely rebranded, built out the platform, added a whole number of different features, and really decided to focus on the engagement. Company was started in 2012 and was sold in 2018. The original founding partners of the firm acquired the company back in 2022, at which point we took on a strategic partner, Merchant, who is currently one of our capital partners and a very important piece in helping us expand and grow this platform into what it is today. And our partnership with Republic Capital Group was forged just a couple of weeks ago. And what does that mean for our audience? We now have the breadth and the scope of Republic Capital to help with the legal work, the succession planning framework, and a number of other advisory services. And I'll let Michael go into that a little bit further.
Yeah, so that's great, Nick. Thank you. So our firm was founded in 2015 by John Langston, who he himself was an advisor, and really just enjoyed helping firms with succession, with sell side transactions, buy side transactions. So we were formed in 2015 as a boutique firm. We primarily focused at that time on working with buyers and sellers who had $1 billion in assets or more. And then over time, things have really taken off for us. In fact, when I joined the firm, we had about 8 people. Now we have close to 20 people. Um, we've been rated #1 in the space for investment banking, wealth and asset management by M&A Advisor for the past couple of years. We've done more deals than anybody else and transacted more assets. Um, our focus is really helping the advisor. As I said, most of us have a lot of business experience. Most of us are over the age of 50, and we're less interested in necessarily driving transactions. We're more interested in helping people, really inspiring to do things that maybe they're not thinking about to help them either retain or maintain their autonomy or come together with great firms and partner. And we've even put in play a post-transaction integration program. So we'll help firms for 2 years after the transaction to make sure it goes well and oversee that and make sure they're well supported. I run that part of the program. We developed an advisory services arm. I mentioned that earlier. We do valuations for firms. So we helped FinLink create their valuation tool, but we can also do more advanced valuations that are more nuanced and very specific and customized to the clients. We have 4 tiers there that we offer. We can raise capital. We can even underwrite some debt in association with some of the lender relationships that we have. We started talking to Nick about, I think, about 4 or 5 months ago, maybe longer, 6 months ago, about this opportunity. We took in some minority capital from Merchant, and that helped to really put us in a stronger position to grow, obviously, and open the door for strategic partnerships like this. And the intent here is really, as Nick said, to broaden and deepen the offering through FinLink, really create an opportunity for advisors to do more than just get a sense of what their firm is worth and maybe, enter a marketplace where they can have some opportunities to talk to buyers and sellers. We wanted to enhance the valuation tool that was being offered, provide other opportunities for a more nuanced valuation, to help manage the marketplace, the buyer-seller relationships, and to provide representation where people might need it for more complex transactions. So I think FinLink, as you said, Nick, is going to be the place to go for a lot of these advisors.
Yeah, thank you. I appreciate that. Another quick question. Could you go over the current fee schedule for FinLink? We have an annual subscription. Is there a fee if we connect with a seller and then end up purchasing that selling firm? So the answer is no. FinLink is and always will be a subscription-based service offering for connecting financial professionals, financial advisors, wealth management firms, CPAs. There is going to be, however, a separate tier or a separate structure for when sellers on our platform or buyers on our platform decide to engage with Public Capital Group. That is something that is being ironed out. For instance, up until recently, we haven't really had any sort of M&A, traditional M&A or advisory services on our platform. Sellers that were looking for guidance, whether it be on the valuation side or on the legal side, would typically be referred to our resource partners. Our partnership now with Republic Capital Group allows us to offer, as Michael had said, a deeper access level into those services that are much needed. And so if a buyer or a seller or both decide to engage with Republic Capital Group, there will be a success fee, and we will have more information about that in the near future. One more question here. M&A isn't right for every situation. As you had said, independence is good. Do you think too many advisors think they're a seller in today's market when they should actually be considering traditional affiliation, outsourcing, or other types of partnerships? Um, Gosh, Michael, I would defer that to you. I think
Yeah,
I think the question in my eyes is kind of maybe that's sort of like a sunsetting option, right? If you're in a current broker dealer, do you necessarily need to sell or can you sunset, right? Is it because that's a little bit different than outright selling your business to where you can get some sort of monetization or revenue stream without actually selling, right, over a number of years, 5 years, 7 years, whatnot. Um, are you seeing that, and do you think that that is a viable option, Michael?
yes. Yes, I think it's a great question. Just to clarify a couple of things that I said earlier. So we started off working primarily with bigger firms. We're now helping all firms, right? As I said before, you'd have smaller firms that need help. We think some of these smaller firms could eventually grow and become bigger, even on their own, if they have a good M&A strategy. So to your point, are there options for sellers beyond transacting? And there are lots of options. And I wouldn't expect a lot of the sellers, the financial advisor sellers, or even some of the buyers to know all these options because many of them don't have a degree in business administration. They don't, they don't know what these options are. That's what we love doing. We love coming in, talking to someone, understanding what they want to achieve, and giving them other ways to look at the world from a business standpoint and structure it. Some of those answers are to remain very independent, maybe to go pure RIA and be entrepreneurial and bring in other advisors. And in other situations, depending on what they're trying to do on a daily basis, maybe connect with a bigger firm and get some operational support and unburden themselves. On the buy side, if you go into a room of 100 RIAs and you ask them how many are in a position to do an acquisition, everyone will raise their hand. And then if you ask them how many have actually done an acquisition, it's probably about 5% of the room or even less. Doing these acquisitions and doing them well and handling the post-transaction integration phase and integrating and having a successful transition is very difficult and complicated. We work with a lot of buyers on really formalizing their M&A strategy, oftentimes creating an M&A committee internally, looking at things a little bit more methodically and in a disciplined way. And I think we're helping them do better acquisitions. So there are a lot of things that we can do to help these firms be more effective either on buying or in positioning them to set themselves to sell or stay independent and find growth in unique ways.
Yeah, no, thank you for that. The uh, the narrative there. And as you can see, I'm kind of going through some of the pieces of the website. Part of the reason why is people were asking questions about the valuation tool. This is included with any subscription on the FinLink platform. So if you're on a Network Premier or Plus plan, uh, you actually have access to this valuation tool, which again is pretty powerful. You get all of these actual transaction data points. And so, even if you're just sort of kicking the tires or looking to see what comparables might be in or around your area of businesses that recently sold, there's no other place where you'll find this information or this data set other than right here on FinLink. And so it's a pretty powerful place for you to take a quick look, kick the tires, but then also jump into the marketplace, create a listing. You might not be looking to sell, but you can create a listing that you're looking for continuity or succession, or that you are a capable successor or continuity option. And again, 13,000 users on our platform have no succession plan. Um, it's an extremely huge number. And it kind of falls in with that range of what we're hearing in the industry, industry wide. And so there's no better time to get involved with a platform like this where you can actually help become a succession plan for somebody else. We've got time for one last question. Let's see. What is the average retention rate post-acquisition? I guess this one would be for you, Michael. Do you see different results based on firm size or geography, or whether the seller stays on? So retention rates, average retention rates. I guess that's for clients.
Yeah, great question. In our experience, now remember, these are the deals that we're actively involved in. We're seeing retention rates over 98%, oftentimes 100%. How is that achieved? You really have to have a good transition plan. So you have to be proactive and be very strong on the communication side with respect to your team and your clients and package it appropriately. I do think it makes sense to make sure that the lead advisors or the selling advisor stays on for a period of time so they can work on that transition process and make sure the clients are comfortable with the new team. That's really critical. I really think it's very important to try to retain all of your team members through the process, all of the selling team members, and all of their clients.
Yeah, and I would definitely echo that, Michael. As a former lender, we saw retention rates very high. Very few times did I see, attrition of more than, I'd say, 5%. It was always in that 1 to 2% range.
Yeah. It's interesting having been on the buy side, 20 times myself. Clients will worry about two things. One, when they first hear the news, they'll think about, well, how does this affect me? And if you have good answers for that, it's done. The next thing they'll be very concerned about is what does it mean for you, the person who I care about, the person who's been taking care of my financial well-being for a long time. And if they know that you're being taken care of and respected, they're going to stay.
That's great, Michael. Appreciate that. So last question here. We've got to wrap up. How many total members are on FinLink? So we currently have roughly 77,000 registered users, and that's across wealth management, so financial advisors and RIAs, tax professionals, so CPAs and EAs, and then support staff, right? So job candidates or anybody who's a non-producing financial professional on the insurance, on the wealth management, or on the tax side. And that could be anybody from administrative to marketing to client services. That's the ecosystem on the jobs marketplace that we're really interested in building out over the next several months and through 2025. So 77,000 registered users. We expect to surpass 100,000 users and well beyond over the next several months. And again, FinLink will be the preeminent networking and communication platform for connecting financial professionals for growth, for succession, for continuity, and offer a network of service providers for helping anybody who's looking to grow and scale their business. And we are super excited about this endeavor. It's been a long time coming. We've spent a great deal of resources and time revamping the whole platform. And we're just super, super excited to bring this out to the industry. Any final questions before we wrap? And anything else, Zander or Mike, that we can leave with our audience before we wrap up today?
I just wanted to thank everyone again for joining today, and Nick and I are super excited to be partnered with Republic. I really think it's going to be the M&A aperture of FinLink, and it is really going to add a huge amount of value where we didn't add that value prior to this announcement.
Yeah, Nick, I agree. We couldn't be more thrilled to have the opportunity to work with you guys and your team. We wouldn't have done this if the core values of your organization didn't align with ours. And we just love how you guys are in this to help people, to give them an opportunity to communicate with each other and to have access to resources so they can be successful. That's what we're all about. And we just think this is a great opportunity for us. And we're super happy to have this partnership. So thank you.
Thank you, Michael, and thank you, Zander. And again, we're super excited, and it's such an important and pivotal time in the industry with the succession, uh, crisis, we'll say. But and thank you so much for all the members that joined us today, and keep an eye out for future updates. We've got a lot of them coming, and we're super excited to help out in any way that we can. And we'll be talking to you soon. Thanks everyone again for joining us today.
Thank you.
Thanks, Nick.